please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
You're with us here on a fresh new edition of Mid-Cap Radar. The market is down just a little bit, not running away. We're still up for the week, so there is no sense of big selling or panic or anything of that sort. 25 lower, we were down 25 2 hours back, 3 hours back. So let's see, 2 hours left to go for close. Global markets, by the way, are also weakish. I mean, to begin with, this big gap up that we saw, not gap up, but the market moving up the way it did, 40 points in the Nifty or so initially. That looked a bit off color because overnight markets had seen some profit taking. And I think what followed after that was fairly okay because global things are looking a little off, and that typically does feed through to the trading here. Right now, I mean, forget Asia, but Europe also is down between 0.4% to about 1% or so. DAX, etc., for example, are 1% plus lower at this point in time. There's DAX, the other markets. Okay, so those are the top headlines. Let's bring in Ashwini, as always, 25 lower on the Nifty. Ashwini, afternoon. Your sense, I mean, it's exactly right there when we last spoke. Where are we headed?
Well, one way of looking at it is that there is no follow-through on the downside also. 11,650 is a boundary for the Nifty. It's recovered from there a couple of times. And also 27,950 thereabouts is a boundary for the Bank Nifty. Now, given that we are sitting on 2 or 3 days of decline, etc., my sense is that if you buy here, keep a day's low as a stop, you could get a recovery going into the close. I can see Brent crude is now down 35 cents. May not be a whole lot, but could be enough to engineer some sort of a short covering. So I'm interested in buying both Nifty and Bank Nifty. My sense is that we may not go down from here, and chances are we may recover back towards the higher end of the range, at least to 11,690, 700 thereabouts. Because bad news and everything is fine, but the market also has to come off for you to do anything. A market which stays strong in the face of bad news is strong, and sooner or later we'll see short covering. Having said that, IndusInd Bank today is up almost 1.5%. So it's had a large decline and a good rally today. So that is a buy with a stop of 1895, target of 1940. Biocon is a buy with a stop of 616, target of 640. And Mindtree is a buy with a stop of 1065, target of 1100.
Look at these rupee sensitives. I mean, if exporters go, Ashwini, any buys there? Or you already are running longs there?
See, that trade has been on ever since the rupee started falling. So that continues. But, the problem right now, or the good thing right now, is what should fall because of the weak rupee is not falling. I mean, on another day, Bank Nifty should be down 500. That, it cannot fall more than 150 points. That is a very sure sign of strength. And, say by end of day or by, say, Monday, Tuesday, if you get crude back at 75, you'll get a fairly serious rally. So the way to look at it is that shorts are not getting traction. So the wise shorts would tend to pack up here because any sort of positive and market will fly.
Reliance Industries has come off some $100 over the last 3 days, Ashwini. Any thoughts on this one here?
See, that was very normal, and when you have those sort of out of the chart type rally, you do get corrections. Right now, the 20-day moving average is about 1230 thereabouts. So you're almost getting to the point where Reliance will also see fresh buying. So this could be a good time to accumulate at least 25-50%. But I'm sure that closer to 1220, 1230, Reliance will find buying.
Ashwini, thanks very much for your trading ideas. Let's also get into more opinion from Sunil Singhania of Abacus Asset Manager Investments. He says that one can see a clear move now from physical assets to financial, and he adds that he is bullish on corporate banks.
The markets are at an all-time high, but maybe the exposure to equity is still very, very small. In fact, there are more people willing to or waiting for the markets to correct to invest rather than the other way around. So I think the clear move from physical assets to financial assets, and investors looking at that is very, very visible. As far as flows are concerned, I've only got more confident in the last 1.5 months than I was earlier. In terms of our view on the banking sector, again, corporate banks look exciting. We have already seen a big outperformance over the last couple of months by corporate banks over their retail counterparts.
For the market, it seems pretty much at those levels, 11,650 odd in the Nifty, and the Sensex down about 100 odd points. But let's focus on what might have been the impact actually of the Kerala floods. Recently, we saw 2 weeks of incessant rain, a resultant flood situation, and we saw, loss of human lives, immense tragedy, and of course, the financial loss which continues to spill over. Jinay Gala of India Ratings joins in to understand the impact of these floods on various asset classes. Jinay, hi, good afternoon. In your research, okay, I think we'll come back to that in just a bit. Okay, there's news coming through that PNB is set to receive the first tranche of money which had fraudulently reached the US, the Nirav Modi entities over there. So we now understand that the PNB is in a position to actually recover some of that money, and the first tranche of payment would be coming to them. And this is what sources in the MCA are telling us. US bankruptcy court has also moved on settling these creditors' claims. So Timsi Jaipuria, my colleague, is breaking that news. She'll join us in just a bit. And we also understand that in US itself, Nirav Modi could be looking at facing criminal proceedings.
I think Timsi is with us. Okay, I think so. Timsi should be with us in just a bit. The PNB stock is reacting. This is, of course, only one part of the total alleged fraud which we're talking about, but this would definitely be seen as some relief for the beleaguered bank. And Timsi should have more details for us. Timsi is with us, I'm being told now. Timsi, afternoon. Take us through the details.
Afternoon, and as you rightly said, the government is continuing its fight against Nirav Modi and Mehul Choksi, and sources at MCA now tell us that the government is confident of the fact that PNB may soon receive first tranche of money involved in Modi fraud, as US bankruptcy court has moved on settling creditors' claims. The US bankruptcy court has found that Nirav Modi and his companies were directly involved in transactions related to the alleged fraudulent circumstances, post which Nirav Modi is likely to face criminal proceedings in the US court. CNBC-TV18 is in possession of the report filed by the bankruptcy examiner appointed by US bankruptcy court at Southern District of New York, and the US bankruptcy report in its finding has also strengthened MCA's proceedings before the NCLT against Nirav Modi. US bankruptcy examiner has determined, and we must, see this as a major move. They have determined that it is highly likely that the CEO and CFO of these companies were involved in assisting of the fraud. Meanwhile, now even Mehul Choksi has also filed for bankruptcy in US Delaware Court of his company Samuel Jewelers, and the bankruptcy case is now listed for 13 September in US, and the government is confident of PNB being proved yet again as a creditor to Samuel Jewelers company of Mehul Choksi. We'll keep you posted.
Okay, Timsi, thank you very much for that. So that is Timsi reporting on some positivity coming soon for PNB. We'll have updates for you as we go along. As we pointed out, we have Jinay Gala of India Ratings, who's with us right now on the show. Mr. Gala, thanks very much for your time. Appreciate you joining in. Your report essentially looks at the impact which lenders could face because of the Kerala floods. Could you take us through the headline key findings of the kind of impact that these institutions will see in that state?
Sure. Hi. If you look at the assessment done by us, basically the Kerala floods could have a material impact on the banks and NBFCs largely operating into that state, where we find that largely the impact would be coming into the unsecured lending, agri-financing, and also on the property consumer durable side. And if you look at the entire topography of the Kerala region, largely the floods have not affected largely the coastal areas, which has been largely the business areas of the Kerala state, whereas out of around 16 districts, largely around 8 districts have seen largely a flooding kind of an impact, which would have impacted around 56% of the total population. So if you look at the overall scheme of things, the Kerala ranks around 10th in the overall bank credit, and it would have around 3.2% share into the credit per se and around 3.8% share in the deposit per se. So on overall piece, the Kerala is a quite important geography for overall banking system. And if you look in terms of the breakup of the Kerala banking credit, around 40% of the credit flows to the agri and the housing piece. So what we are reading largely is that there could be a large amount of credit impact on the agri financing losses which could come in, and also on the housing side there has been a lot of collateral damage which has taken place. That would technically increase the LTV ratios of many of these lenders, largely because of the higher haircut on the collateral which they have been used as a collateral for financing. So on overall scheme of things, what we see, there could be a medium term impact on entire banking and NBFC space, largely operating into the Kerala region.
And who are the big lenders in these two segments in Kerala, which is agri and housing?
So there are, to look at them in terms of, there would be a lot of exposures through the banks who are regional focused banks who would be largely operating into that region. But having said that, what we have analyzed per se is that there could be an incremental slippage which could be around 30% increase on the overall run rate of their slippage around, which could eventually flow down to around 20% increase in the gross NPL for the larger banks who are basically operating into the Kerala region. So that is the one segment which would definitely have its impact. Also, we see a lot of impact in terms of gold financiers, because Kerala being a large market for gold financing, there have been many of the players who have around 10 to 16% of their book exposure in the Kerala state, and largely the customers of the gold financiers are mostly weak in nature, which would have their livelihoods depend upon the agriculture. So there could be a moderate impact on the profitability of many gold financiers there. And another asset classes where we see there could be a material impact would be the microfinance piece, largely being the unsecured nature of the funding which is done under microfinance. But on the overall scheme of things, what we see is microfinance is Kerala microfinance market is a very smaller compared to the overall scheme of things. So NBFC MFI exposure to the Kerala state would largely be around 21 billion. And if you look at the PAR 13 numbers, it has been around 2.7% in FY18. So we can see a material uptick on the PAR 13 numbers in medium term, and majorly on the microfinance players.
Would there need arise, you think, of a special dispensation from the RBI? Is there a likelihood?
So RBI definitely has a guideline for a natural calamity occurring in the state of Kerala, and there could be a immediate forbearance for the agri loans per se. But for a retail loan or an SME loan, there needs to be a representation which needs to be made to the RBI. And as per our discussions, banking community has made that representation to the RBI, but outcome is still yet to come out. So having said that, I think so if you look at the past history of the forbearance, definitely the forbearance would help in short term per se, but when the period of forbearance ends, there can be a material uptick in terms of slippages or a credit cost, largely because there is a lot of credit which flows to informal category, where the NBFC market is also gaining market share. So this informal category kind of a borrower, if he loses a livelihood for a quarter per se, and to recoup that loss would take at least it would take a longer period of time.
I mean, in terms of demand for loans picking up because of rebuilding efforts, etc., any thoughts on that?
Yeah, sure. There would be a demand, pent-up demand, which would be coming in terms of growth. But going forward, the lenders would be quite cautious in terms of lending, and incremental lending would be flowing to the better-rated borrowers per se. So in terms of incremental disbursement, there would be a lot of cautious approach, and also the collaterals would be lenders would be far more selective to pick up the collaterals per se. So what we see is there can be an immediate growth in consumer durable financing. Housing can be the market which can grow per se, and also there can be a two-wheeler financing market which can grow. But having said that, I think so the main product which would sell for banks would be largely loan against deposits, because Kerala being the rich market for NRI deposits, many of the borrowers would basically leverage on that to refurbish their houses per se.
We got a 16-odd point cut, so market holding on pretty firmly, not selling off or anything. Actually, it's improved a little bit from the last we looked at it. Jayesh Gandhi of Aditya Birla Sun Life Asset Management Company joins us now from the sidelines of the CFA Society India 3rd Wealth Management Conference. Jayesh, thanks very much. It's always a pleasure. Let's just begin by talking about the market. We're hitting pretty much new highs practically every day, every week. We are outperforming other emerging markets. Actually, on a YTD basis, the outperformance is quite significant. What's your sense? I mean, are we at a point where we need to cool off a little bit, a bit of a correction before anything else? What's your sense?
Well, calling a correction is always a tough one. Market generally ends up climbing a wall of worries, which is what has happened in the last few months as well, if you might have noticed. And, frankly, I don't see a significant correction. There could always be a short, small corrections, and those are part and parcel of the bull market that we are currently in and experiencing, fair amount of robustness in equities because of better earnings, because of, better outlook on the economy, etc. This excitement and interest in the equity markets will continue. There could be some small, volatility, let me put it that way, but not a big sell-off. That's at least my view as of now.
Hi, Jayesh. Good afternoon. The year has been tough to be a mid-cap fund manager, right? But you think there's value back at current levels?
Oh, absolutely. You nailed it. We are seeing a lot of value in the mid and small cap segment. Please understand, you have to look at the market and market performance over the medium term or over a 2-3 year period. And if you recollect, last year we had a massive uptrend in mid and small cap, where the small and mid cap indices gave returns far, far higher, over 100% in some cases, over the large cap index. And some of that has been evened out or normalized this year. Having seen a correction in the mid and small cap space in the first half, my sense now is that the indices should move in line. Unlikely that mid caps and small caps will underperform more than the large cap market over the next few quarters or in the medium term, near or medium term. And my sense is that earnings for mid and small caps are going to come back significantly better than some of the large cap indices. And that will, to my mind, add not only better valuation, but also significant comfort for investors to take a medium-term bet in this segment.
Jayesh, you own PNB Housing, Repco, Satin Credit, etc. in your portfolios. What is your view on that space now? I don't know if you bought it recently or you've been owning it for a while, but at these levels, what's your view?
Well, home finance companies, NBFCs or focused home finance companies are largely compounding stories. The deficit or the requirement for home finance in this country is humongous. It could go on for years and years, and there is significant amount of investment that needs to go into home finance and lending in the home sector. Obviously, the NBFC have an edge because they are very versatile, they're very dynamic, they can tailor products specifically to customer requirement, and they are addressing requirement of customers which are currently not being addressed by the banks. And hence, we think focused housing finance companies have a very long positive outlook in terms of earnings growth and of course in terms of delivering asset growth over the 3 to 5 year period or even longer. Valuations with the recent corrections have come down to a more measured level, and to us that offers a great opportunity to buy growth stocks at reasonable valuation.
Okay, also SEBI is considering doubling or even quadrupling the minimum ticket size for investments in PMS schemes. You think that's a move that could impact the mid-cap space?
Frankly, we have not seen much impact, at least at our end, of the classification and the changes in the scheme classification which has been suggested by SEBI. I can't talk about others, but at our end, the impact has been minimal. Yes, you could say that some bit of euphoria last year in the small and mid cap space, particularly small cap space, was driven largely by retail and HNI community and a large number of PMSs run where unrealistic expectations were given out, or investors were sold products with unrealistic expectations, and some of those probably would have gone fat, or some of those expectations are obviously not met. They are unlikely to be met anyway, and so there was a drawdown from that section of the investors in the first half of this year, which led to a sell-off. But again, those are part and parcel of any bull market. So I'm not so concerned or worried. In fact, we believe that some of the changes suggested by SEBI are very good and healthy for the long-term growth of the industry, and I see very little impact of those. But there will obviously be section in the investment community which create these excitement in the market, which again leads to drawdowns in subsequent period, and that to my mind is probably a larger driver of some of the correction in the small cap space.